Happy Tuesday, happy trading. Nothing I'd rather be doing on this Tuesday than trading. Let's go over flow state first, then get into the trades. If we look at C, that's a great flow, so let's hold C. CX. Oh man. Oh, that's not the beginning of the day. No, not quite. Intel. Not like C. Merck. Merck looks like it's comp. Uber. I'm gonna say no on Uber. Walmart. No. So has to be between Merck and C. And what do we notice? Previous day's close, 200, both flat, and even a flat 20. Flat is 20, previous day's close, flat 20. Color change, green, buy into it, nothing to the left. So let's go into our trades. First trade was Walmart. So our first trade was Walmart. We were just looking for a trade. We didn't have anything. Um, really, what we should have done is we should have had, hey, here's an elephant bar. When it was full, left clearing, buy into that, set the stop, ride that up. That should have been the trade. We didn't get that trade. So what we saw here is we saw a green bar and a red bar takeout. So we played that red bar takeout, but the next bar it went below our stop. So we immediately got out. And I'll say I like that play. I like getting out. I don't like the entry. I like the exit. The entry would have been better had it been a red bar, red bar, red bar, green bar takeout, entry, and then ride it up. But I'll take it for now just because the exit was good. But that needs to be eliminated out of our trading to be a profitable trader. Our next trade we took on it, we tried to do the Velez buy setup. We have several sells going down, more than three, and then we have a green bar takeout of a red bar. And as you can see, this green bar doesn't quite take out this red bar, but we get in it anyway. I like the exit. I don't like the entry. That needs to be eliminated from our trades as well for the day. So you eliminate the first trade, eliminate the second trade. That probably has us in a better position overall throughout the day. So now we get another position that we end up taking. It looks like it bounces off the previous day's close. That's that dotted line. We get a buy signal right here. It goes all the way to the flat 200. Keep in mind the 200 flat is our strongest position. And then we get a red bar takeout right there. That right there is the sell. We should have took that as a sell and set the stop right above it and rode that out. We didn't catch that. What we caught is we caught the hidden bar, hidden green bar removal. So this was a green bar, but then it turned red. So we bought in here and we set the stop right here. Now, we only played that till the previous day's close because that's with such resistance. that was a feelings trade. We were trading our feelings. What we needed to do is set the stop up here and let it do what it does. Let it do what it do, to be honest with you. And had we have done that, we would have had a better trade out, and we would have been more profitable. So all three of those trades were done incorrectly, and I'm comfortable saying that. This one shouldn't have been taken. This one shouldn't have been taken, and this one should have been executed better. So let's say we keep going. Now, when you see this right here forming and you see the 20 going up, what we could do is we could have bought here, especially on the previous day's close, and did a color change here, set the stop. We could have done that here. Keep in mind that the 20 flat is the most powerful position, but that is an opportunity to buy. Maybe not so much here. Right here is an elephant bar clearing, nothing to the left. That's a must buy position, and you add in extra shares, as many lots as you can get in there, right there. One, two, three. That's pretty far away. Pretty far away. Get out right there. Take some profit. Let it come back. Maybe buy back in here. See if you can get any more profit. Maybe buy off of this flat 200. That's a play that you can take advantage of. Maybe nothing to the left. You could sell. Position of power. Let's see what it does. Keep in mind this is previous day's close. Often a reversal off of that period. That's a strong indicator of a reversal. This is an indicator off of a flat 200. Keep in mind the end of the day. We ended up buying this. We did green bar color change, green bar color change, and we had so many lots we just got out immediately. Next stock's come. So I mean that's good, but honestly, it would have been better to have got in here and done the same thing, and taken out profits here. Let it ride up. Set the stop right there. It would have been better to set the stop here. 3 pushes, get out here. Or even you would have got here in here, added more here, added here, got out here. Just several other things we could have done. Let's go to our next trade. It's Intel. So Intel, we're looking at a Fab 4 here. We might as well include the red bar since it's so close. So Fab 4. You could say, hey, it's a green bar off of the Fab 4. Buy into it. Set the stop under. Could have got out there, and that would have been a nice trade. Looking from here to here is the gain. It's like a 80-cent gain, maybe $1. What we ended up doing is we were late. We were playing in Walmart, so we got a green bar color change. We bought in here, and then we got out quickly. I don't like how quickly we got out. Realistically, we should have. Green bar, hidden green bar right here. Set the stop right here. Let it ride, let it ride, let it ride. Maybe get out there after 2 pushes, 3 pushes. And then color change here, get out here on new high. What we did, of course, is we did color change, got out here, and then color change, got out here. Which worked from a profit standpoint, but the trade could be better, and we need it to be better. We just need it to be a little bit more professional. Now, this is kind of flat, so it's going to go up and down and up and down and up. This one kind of bounces off the 200. That might be playable. And it was flat. Didn't go below it. Take it out. 1, 2, 3. And then after Intel, CVX. CVX, I think you could have done Fab 4, erase, first bar, torpedo plus. I'd say buy here, set the stop, max stop, which ideally would be here, but probably was here. You get profit, nope, profit, nope, profit, nope, profit, profit, profit. Ideally, you'd probably get out somewhere over here. You held it for so long. But that's just you really holding the trade. And ideally, you're looking at that, and you're thinking it's going to break out. And then you just got the indication it wasn't going to break out here. So, what we ended up doing, I think there's a couple things you could have done. I think you could have also played it off of this previous day's close, tail bar. That would have been nice. What we ended up doing is, this is an experiment we were having. You know how if it's a flat line, if the 20 is a flat line like this, the price goes up and down and up and down. We were thinking that this was a flat line, so it was going to go up and down and up and down. So sell on the green above the flat line, and it just went up. So that's why we ended up having a bad trade there. So that should be X'd out. Not not going to experiment with that anymore. This right here, this we considered an elephant bar off of a flat-ish 200. Now, it was a little bit of distance away, and it just didn't work. But I would take that 10 out of 10 times. If you look at the 5 minute, it gives a better indication. I'm not going to show it, but it gives a better indication of why it didn't work. It was a little higher away from the 20 than expected, but I'd take that 10 out of 10 times. We probably should. If I wouldn't have lost this trade and wouldn't have made some of the other previous mistakes, I would have held to this line right here, but we got out about 3/4, a little over 3/4, so I was comfortable saying that was okay because we looked at it from here, and here to here was about 3/4 of the move. So we can get out at 3/4. Now this was when we missed. This right here is a bear 180. That's going down. This is flat. We can take that. And you look at that. 1 push, 2 push, 3 push. Get out. Oh, we missed this one. We were off. I mean, it's 12 o'clock, so we were at lunch. But this was just a color change, flat. Perfect. Just weren't at the desk to catch it. Look how nice of a trade that would have been. And then just didn't know what to do with it once it got down there. We saw a bull 180, played that with the stop. Chevron's one of our more expensive stocks, so we got out quickly, but if we would have held it, it would have been a better trade. We got in about another $1, $2. We took it again when we got another color change on the 20. Got out real quick. Again, it's one of our more expensive stocks, so we've been playing it like that, although that's not how we should play it professionally. Next stock is going to be Merck. I think Merck had the greatest flow, if I'm not mistaken. You have the Fab 4. Buy. Nothing to the left. Get in here. Probably get in here when it's a tail bar. Ride that thing up. Ride that thing up. Ride that thing up. And here's an indicator to get out. Sell. That would have been go to the beach, go to the mall, go do something else. Your day's over. Excuse me. Here we can say we have a topping tail bar. 1, 2, 3-finger spread. You could ride this one down. Right here you have off the 200 on the 5 minute. That's why that stopped like that. So erupt. It helps if you're looking at both, but I don't know how you would have been able to see that any other way. And then here's the flat 20. Just going to go up and down, up and down, up and down. Looks like it respected it off the 20. It was going back and forth, back and forth, back and forth, back and forth, and then this is where it kind of respected it. This is where it respected it. You got a clearing bar, nothing to the left. We bought in here. We could have bought in here. Went straight down, and we got out quickly. We just fell so fastly that we just got out. Didn't feel like it was going to drop no more based on the velocity. If you look at the 5 minute, it happened to just be at the 200. So take that as you may. And then it just flies up. It just flies up, and you could say this right here was a bull 180 or a bull 180, and it goes flying up. But I don't know how you would have caught that. I really don't. You would have just saw it and then played it, but I tried to play it down. Because this right here was going down the 20, and I guess since this is a crisscross, a 200 and a 20 crisscross, this is a wide crisscross, so you don't know what to expect. I tried to play it down, and it went exactly the opposite way I went up. So the next is Uber. Uber's a hard one. You would say, hey, Fab 4, position 1, position 2, position 3. You'd buy into it. Get in position 3, get out. High price, 3-finger spread, color change, sell, get out. Right here, a 20 MA halt. Flat 20, up and down, up and down, up and down. Elephant bar off of a 20. Buy into that. Get out quickly. Might be able to play that one. Might be able to play that as a gift zone. Goes all the way back up. We ended up not playing it till right now, and we were trying to play the flat 20. If it's below, buy. But we just sold, not bought. So to each his own. The only one left is a C. And with C, you would do, you could do it Fab 4 like this, or you could do Fab 4 like this, either or, however you wanted. And it would be nothing to the left, but wrong color. This is a red bar takeout hidden, so you could buy this and then take that out, and that's go home, go to the beach, go do something else. And then this is a red bar takeout. Ride that down. This probably on the 5 minute 1050, 1050. You could say green bar takeout. Ride that up. Now you're flat again. Wait for something to respect it. There you go. Stop. Gift zone. Get out. Gift zone. Color change hidden. Flat. And that's it for the day. As you can tell, we're getting a little better. Hope you're getting a little better. We'll be at it tomorrow.